Hello, so today is Thursday the 9th of March, and I want to talk about it should be quite a quiet day in terms of data. We've just had, of course, the full moon rout. We've had pretty nasty sell-offs since Chairman Powell's testimony before the Senate and Congress, basically very hawkish. I think that there's a very good chance that we get a 50 basis point rise next. So, we've got a few problems to contend with before our crypto winter is over. But for tomorrow, we've got the jobs numbers. We've got the delayed non-farm payrolls. And that is one of the key data points that the Fed is going to be looking at when it decides how much to hike rates by. So a strong jobs number would be a negative for the market because it means that there's no real impediment to the Fed hiking harder, higher, faster. So we'll talk about the non-farm payrolls tomorrow, but overnight we've had the news that Signature Bank is going to liquidate and wind down. Now, I don't think that in it's caused a little bit of a sell-off in Bitcoin, but there are a few other reasons why I think. Let's start with Bitcoin spot. There are a few other reasons for the sell-off. I think more worrying, it looks like the US government are transferring crypto to be sold to Coinbase exchange specifically. So potentially selling a billion would also be quite worrying. I think they're selling 49,000 Bitcoin, which are government law enforcement seizures, apparently. So, of course, we don't know when they're going to sell them. I think it's more likely, unless they're stupid, that they sell them on a bounce. But that means that, even short term, when Bitcoin makes a bottom, this is a daily chart, you can see it almost always retests the bottom with a slightly higher high or a lower low each time. Even on the short term, we can see here when we made a bottom in February before that last push higher, there was a retest. So for now, we are coming into levels where I think, in terms of support and resistance, and for a number of other reasons, where I think that we might find a bottom. So I'm going to look at Bitcoin spot first. And I've marked these kind of horizontal levels. So even if you don't do fibs or you don't do anything else, you can just mark on your chart really clearly what levels at which buyers were previously willing to come into the market and buy or sell. So we have reached one of those levels here at 21,000. Between 21,500 and 21,800 was where I was looking for a number of reasons. Now, somebody's asking me my opinion for the next 6 months and 12 months and so on. I'm actually really clear that I think for the next at least 6 months to 12 months that we have a decent chance of a bounce. I think that the economy could get pretty ugly in 2024, but I also think that Bitcoin could shape up as a better and better hedge. So for now, though, short term, I'm looking at the level where we might bounce. After a big 5-wave rally since November, I'm looking for 3 waves back, and that very often is back to the previous wave 4, which would mean that's kind of around where we are now, 21,500 for Bitcoin. So we've come back into levels where I think that we could make a bounce with this sell-off after the new moon in the last couple of days. Sorry, full moon in the last couple of days. So you can see clearly this support and resistance. If we lose this support and resistance here, I think there is an interim level look at 20,000, 20,300 in these highs and lows. But the better, I think, level is going to be around 20,000, 19,800. That's where the daily 200 moving averages. That, of course, is the infamous high from December 2017. and quite a big level kind of engraved in people's memories. So if we can say quite clearly then, I think that if we lose this 21,400 level, especially in terms of our moving averages, this is where we're likely to come down to. Now, I spoke yesterday about what happens very often when we get a bearish cross of our shorter term moving averages and longer term moving averages. Very often we get a pullback, and it's pulling back into those moving averages that will tell you whether we are going to continue lower or if we break back above them or not. So for this reason, I think that we are potentially at an important level in Bitcoin. And when, as you know, I think that the futures have a bigger and bigger influence in Bitcoin. And I'm also going to point out here, if we go to the weekly, that our weekly 20 moving average, and if we base our levels on closing prices, which we could do here through the middle, there is the potential that we creep a little bit lower in Bitcoin. That 20 moving average on the weekly is at 21,200. So we do have some volatility potentially tomorrow with the jobs number, and we potentially have a big seller in the market as well. So we need to be very careful about buying setups. Like, so for me, you know, I want to see a bottoming pattern if I'm going to buy. I want to see a short-term flip. I want to see us making a base at this level on its short term and flipping the short-term moving averages. So and I don't like to kind of see that at random levels. I like to see it at a level that I'm kind of watching. So for that reason, we are potentially at a pretty big level here. Also, I said, you know, I had my fib, if we are going to talk fibs, I had my fibs on this most recent swing here in Bitcoin from low to high. And once we lose that 886 fib, I like to keep it as my bullish line. So, you know, fib levels are support and resistance for me. So we put them on. So that means 21,814 basically, or 21,800. Back above that level, which is resistance at the moment short term, would be a bullish signal for me. That's also our hourly 20 moving average. So short term on our hourly 21,800 becomes our resistance, and if we recover that level and a daily close above that, then that would be a short-term bullish trigger, and I would probably cut my shorts if I was looking at that. Now, as you know, I think Bitcoin futures technically are quite important, and so let's clean up our chart here in Bitcoin futures, because I think we are potentially at a pretty big level in Bitcoin futures as well. Why? Well, obviously the daily 50 moving average. Remember, in the futures, the daily moving averages are going to be at a different place, because 2 days every week the Bitcoin futures are closed. So we are at previous lows almost, and we're at this big daily 50 moving average. And in between these daily moving averages, you very often kind of, you can go back and forward between the two. Like here, we hit the daily 50, came back to the 20, had a little bit of bounce and carried on. So potentially we could see the bullish reverse of that here. We could see, you know, a bigger bounce from here. There's a number of reasons why I also think that that might happen. So here, or a little bit lower in Bitcoin futures, we can see high to low, important support and resistance levels. We can also, let's go down to the hourly or 4 hourly. We can see that we've also met a equal measured move level. So if I measure from this high to this low, here's a nice ABC correction in the middle. We're around about this equal measured move level, 21,795. So remember we said in the spot, 21,800 back above it would be bullish, 21,800 here back above that level, and a daily close back above 21,800 in the Bitcoin futures would also be bullish. Holding underneath it, we are definitely continuing lower. So do I think this bounce will be happening today? Likely not, but I do think that you know, like a really bad jobs number might just rally the market tomorrow and we might get our bounce. So let's see. There is room in these futures to go a little bit lower in the US trading. Remember, we haven't quite hit those support and resistance levels. Am I bullish? Longer term Bitcoin CM, next 6 months Bitcoin? Absolutely. Am I bullish long term Bitcoin? Absolutely. But I'm not ruling out that we don't make a bigger inverted kind of head and shoulders pattern and we do a bigger pullback. You know, we could eventually come back. I think that there is a very, very, very good place to be buying Bitcoin back between 19,000 and 20,000. I think it's very unlikely, well, not very unlikely, I think it's more unlikely that we will see 15,000 again. But back between 19,000 and 20,000, I think is a very good risk reward. Now that could, of course, in an inverted head and shoulders mean we come down to 18,000, 18,500. But and we come down here, that would be a really great look, wouldn't it, for Bitcoin? But we don't always get what we want. And so I'm just going to go level for level. And level for level in Bitcoin, we are coming into a level where we might bounce. Or we break, and we know where we're going if we break, right? Clearly, let's we could put big fibs levels on here in. You can see that this is also the 38.2 fib in the futures is at 21,365. So we know very clearly that if 21,365 breaks, we might have a little bounce around here, around this 200-day moving average, but we would look for that level to be resistance, and then 20,000 next, and we'll be hopefully looking at a gap fill, something like that. And potentially we could come down to, you know, 18,000 or lower. Sorry, not 18,000, 19,000. 18,900 is where the 61.8 is, and 18,000 is kind of around where these lows are. So I think we get into much better high risk reward when we see that. Now, what I would like to see here in Bitcoin is a bounce from this level, because if we're looking for a big ABC, I think that we may be close to a level where we finish the A leg. And so that would mean that, you know, that we come down here and then we have a bounce, and then it gets really easy to measure and watch the price action, how it unfolds for the next leg lower. So yeah, that's what I'm looking for today or tomorrow. I think be careful with your shorts, watch out for a bottoming pattern, and if this level breaks, happy days. We're looking for 20,000, 19,000 zone. But this 21,500, as we said all along, this would be a really important level to be looking for a bottom. Now, if you're one of these people that like to add a bit on pullbacks, you know, and you don't really look at the price action or whatever, you could put your toe in the water here for a bounce. Be careful with leverage though, if you're just buying levels without any good reason. So let's take a look at some of these other coins and see if we've also come into levels where we might want to be thinking about, or approaching levels where we might be wanting to think about buying. One of them is ETH. So here in ETH, we have reached an ideal bullish Gartley pattern. So what's the Gartley pattern? It's basically a corrective move of three waves. So you have 1, 2, 3, A, B, C, and the first swing is usually a bounce from the 61.8, and the second swing holds the 786. So the level we're looking to hold in ETH after this bear fag breakdown yesterday is 1523 on a daily close. Now we are solidly in a downtrend. There's lots of bad news out there. So our confirmation that we are going higher, if we have reversed in ETH, would be back above 1510. So I don't think it's a good idea to be too aggressive down here, but it might be worth watching the lower time frame price action to see if we can bounce and back above 1510 we would be looking for 1630 at least. That would put us back in the top of the channel. And then see if we can break out from there for another leg higher. There's our target. Initially, 1634. So, that's ETH. Potentially. And you can see, you know, if we look at every other fib swing here in this, you know, 236 wasn't that well respected, but it became resistance, so I'm going to lean on it. 38.2, huge bounce. 50%, huge bounce. 61.8, huge bounce. There's no reason why we shouldn't see the same from this 786 level at 1523. But we'll only see, but it might just be a shallow bounce, and we'll still be in a downtrend unless we can get above that 1570 level. My apologies, I said 1510, that's my eyesight, it's 1570. So 1523, short-term upside target would be 1570, and if we get above 1570, 1630 would keep us in this down channel, and we'll see where we go from there. But that's what I'm looking for in ETH. Yes, potentially it's not a bad place to buy. ETH could potentially here, this is a 4-hour chart. Doesn't look terrible when you draw it as a diamond. And what's a diamond in technical? And it's a pattern of indecision. So you get expanding volatility, and then it quietens down, and then you get your breakouts. So this doesn't look too terrible as a diamond. Not quite filled in yet. So, you know, diamonds can break either way. So we could see you can do a lot more filling in, can't we, before this is resolved. Up and down and up, you know. So a quiet day today. I'm looking to see if the market can make a base here at this 786 fib level then in ETH, you know, or we might just, don't know which way we go here in ETH in this diamond. So that's a 4-hour chart. That's how I see that. Now, am I bigger picture next 6 months bullish? I think that yes, there's great risk reward buying dips at the moment. You know, so let's see. We've got a very similar situation. So we've talked about that short-term 786 in ETH. Here we can see exactly the same pattern in a fractal. So we bounce from this 786 retrace level here at 1105, and so 1909 it was the resistance. We couldn't close above it, and you can see we're still in a downtrend. You can see that regular candlesticks. So 1105 is really, we've got a big trading range here, and above 1909, if we were to close above this, we would should bounce to at least 3,000, probably 3,700. So still in a downtrend when we failed here, unfortunately, last summer. Okay, I'm going to look at a couple more altcoins that I think are of interest at the moment. So with the stuff going on with Silvergate and the Silvergate failure, you know, there are other banks stepping up. One of the best things about Silvergate was that you could do transactions. So for big hedge funds and investors, you could transact in and out of crypto and in and out of exchanges, more importantly, 24/7, even when the bank was closed, because they had this SEN, Silvergate Exchange Network, which basically wasn't a particularly clever technology. It just meant that everybody you were transacting with also had an account at Silvergate. So you could send money to Coinbase or Gemini or Paxos or Circle or whatever, and get it back again digitally at the bank. So that, and because it was a federally regulated bank, people, big investors, had a lot of trust in it. Now, Signature, which is the alternative in the USA, and the only one where you can do that in dollars at the moment, has a kind of similar system. So it's not like there's a huge gap. There's also another bank, a crypto banking firm called BCB, that does the same. They're accelerating the ability to add dollars, so there will be then another alternative. At the moment, you can only do that with BCB Group in euros or pounds, not dollars yet. Believe me, there will be other banks that will step in to fill the gap. Silvergate just did so much business, you know, so much business. It will be too tempting. We need to watch out for the bad actors, though, because whenever it's easy money, that's when they come in. I think short term, though, because not everyone will have an account, an ability to do all that set up. Short term, the stable coins will become more important or useful. So Circle and Tether again. But there you go. So one of those ones that they said, everyone said would benefit was Lido. Let's take a look at that, because that lost important support for me this is LDO Tether. I'm a bit worried about this one. I think this has the look of a big ABC. So if I draw from this low, I also think that this was an irregular start to this correction. If I draw it like this, it lines up perfectly. Which means that, you know, when you do an ABC pattern, the 61.8 becomes important, which is 235. If I draw it like this, though, and say, gosh, we didn't quite meet it, we've lost that 61.8. Because I think that this was an irregular start to it, and this is all corrective. I'm going to say, this maybe is at a level we could bounce at. If we don't do that, clearly we're not in terms of this swing. But if this was, I think that we potentially have lost some support here. But because we've done 5 waves down, because this is potentially a 38.2, yeah, this wouldn't be my favorite place to put my money, even with all the talk of stable coins. Whichever way you look at it, I think we've lost important support. And so even if we just draw it as trend support here, so I wouldn't sell this, because I think it's clearly gone too far and we're at risk soon of being at a 5 wave. But if we wanted to see if this was just a false breakdown in the FUD overnight, let's see, or a shakeout. Remember, these are very manipulated markets. So yeah, this would be a bit of a false breakdown if we could close back above 2.4, I think, and this consolidation high that we're looking at here. Otherwise, and that's a daily close we kind of need to see. Otherwise, yeah, this one's lost important support, and 2.1 could be where we are headed next. If not 1.8, which would be where the 200-day moving average is. So this is not one of the ones I think is going to be benefiting from what's gone on with Silvergate. Let's take a look at some of the other coins that have been exciting lately. One of them is Solana. And yeah, let's take a look at Solana, because a lot of stuff has been pretty beaten up. Let's see. Now, I think if this is so you know the thing about 3-wave corrections. So we have a 5-wave rally. We look for a 3-wave correction. Ideally, it comes back to the bottom of this wave 4. That's like textbook trend pullback. Sometimes, though, we make irregular or flat corrections. They call them an Elliott wave, or expanding. You know, we can make all sorts of shapes. So an irregular correction is where instead of making a lower high like this, we make an equal high or a higher high. And when we do that, we usually run and take the stops out. It widens, and so it looks a bit like a broadening wedge when you do it, like doesn't it? Looks like an expanding pattern. So in terms of fib projections, let's get rid of those. In terms of fib projections, we didn't hold the equal measure move, but we're at this 1272 level. And if I put my fibs on from the lows to this high, not this highest high, yeah, no reason to be buying this one either unless it gets back above 20. I think it's got further to fall, and we haven't reached that 50% level, even if I put it over this swing, which is wrong. So more likely, I think we come down to this 1.618 and 618 pullback, and so I'd be looking for this to be resistance. Now, if I'm wrong, we would need to close back above the 1980, the support that failed in Sol. So not very pretty in this one. Although I think we bounce here, I would not be buying this unless it got back above 1982, and even then I would still only be looking back towards maybe 22 or 23. So another one has been very popular lately is FTM. Let's take a look at Phantom. This one I like a little bit better, mainly because it hasn't broken the supports we're looking at. I'm going to start with regular candles and say, look, here we are back at the weekly 20 moving average. We are at the equal measured move level. On the daily, though, this suggests that if we lose this level, 0.355, we're going to come down to the 200-day moving average, this kind of important support and resistance level through the middle here, and have further to fall. So this, for me, I've got a little bit of Phantom. I was hoping to buy more. You can see these lows, highs, lows here, all the way through. So 0.288, 0.3 really is where we fall if we lose 0.35. But this also is potentially a bounce off of me. Whenever you get an equal measured move like that, I'm always interested. If I put my retrace fibs on from low to high, this is also a 61.8 level. So happy days. That means that if we can bounce from here, we're likely to come back to the middle, the 50, which is at 41, and above 41, we're likely to come back to the 38.2 and this 61.8 level. So lots adding up to this being a potentially good bounce support level for FTM. And that's what I'm going to be watching for today. See if it can make a little base here. See if we can cross some short-term moving averages. Here, if we look at this 15-minute as well, gosh, above 0.36, got quite a nice bounce set up, haven't we? So FTM's on my radar. And the other one, of course, that's been outperforming that we've been watching is Ripple. Let's take a look at Ripple. Now, Ripple hit the resistance, hasn't broken out. I think a nice three-wave correction here in Ripple would be a really good look. Hopefully sideways consolidation. So we can see let's go to the daily. There's a few reasons why I think we could break out here. One of them, I like the bullish divergence on the RSI on the daily. So we're making lower lows in price, but higher lows on the RSI. If we look at it on the 4-hour, though, we are due a bit of a bigger pullback. So I think we've seen one wave, and I'm going to watch for this next wave. Now I'm going to put my Heikin Ashi on. And so look, we've gone one and then A, B, C, and we do another leg. Why do I think this is just a correction? Let's look at this in a little bit more detail here. Maybe a 15-minute you can see. So this is an exact textbook ABC rally. That's where we stopped here. 3 waves, equal measured move, 0.3958. That means that we've got really kind of short-term clear parameters here in Ripple. We break this 61.8, 0.39, we're going to see another leg lower, so then I'm going to measure from this high to low like this. So then I would have 2 levels that I'd be looking for support in Ripple. So if 0.39 breaks, I'm going to look for a retest of 0.385, but potentially we come back to 0.378. So in a bigger A, B, C correction. So otherwise, if we just break higher here, I'm in. I think we've got more upside to come. I'm wondering if this is because insiders know something. So that's what I'm watching for in Ripple. So just going to see, I think we've got one more. We're going to look at FXS. Okay. And Andrew, I'm sorry, I have not been on this one. Okay. Let's start with the weekly and look at where we are with our weekly moving averages. So with these weekly moving averages, I'm just going to get rid of these fib levels, even though they look pretty good. With these weekly moving averages, you know, when you lose a back test of a 50, you usually come back to the 20, and there's huge support here as well. So just like not everything is looking terrible in this FXS in terms of dollar, it's not looking terrible either. Double bottom, double top. So we're basically back testing this sideways range that we were in. If we take our fibs all the way from the lows, highs. Hi. So we bounce from this 50% level and we're underneath it. So that 50% level is going to act as our confirmation if we bounce that we are going higher. So in terms of those fibs, we haven't really got support here. So I am looking for a support here. This is a weekly chart though, and there is room, I'm not going to lie, to go a little bit lower. Maybe 7.9. Let's measure from the highs. This is a clearly lovely textbook ABC correction in the middle here, isn't it? So let's measure high to low. Look, so that 61.8 level lines up with our 50% confirmation level that we're going higher. So he closed back above 9.18 definitely, and this previous low definitely confirms a bottom. And if we've overshot this on the weekly, that's what we are going to be looking for. Otherwise, I'm afraid we're not quite where we need to be. We have got room. There is 2 support levels, maybe 7.9. But the equal measured move level and the daily 200 are a little bit lower at 7.2. It's pretty good support and resistance around here as well. There's lots to like about 7.2. So be patient, not a bottom yet, and not where we need to be. There is one other way to look at this. Classical technical analysts will likely be looking at this as a bit of a head and shoulders pattern. So let's take this away and show you what I mean. So just going to change the color. So we've got left shoulder, head, right shoulder. It's not very balanced, but the shoulders are quite balanced, so it could work that way. And if that's the case, we measure from the head to the neckline and we project it from there, and that sort of lines up 61.8 of that pattern from the 200, and that says we could go even lower, which is not so happy. So this is one of the ones with the bearish cross of the daily moving average. Unless we close back above That's that 9.8, 9. We're in a bit of trouble, I'm afraid, and headed lower for FXS to 7.2, maybe 6.6. 7.2 I like better as the equal measured move, I have to say. I'm not convinced this is a very in the head and shoulders thing. I'd rather do the equal measured move. But this is a zone where I would be looking for a bottom at this point. Okay, I hope that is useful, and I will do regular markets after this. And if there's any stocks anyone would like me to look at, send me a message and let me know, and I will